Hour. Well, joining us now for analysis on these markets is Ryan Lamond, CEO and co-founder of Neovision Wealth Management. Good to see you, Ryan. Thank you for making time for us. We're just looking back on the year that has been 2025. I think you've been underweight US equities this year, sceptical about how financial markets have handled AI. But as I say, we've just hit another fresh record on the S&P. So have you got any regrets looking back at the year?
Good morning, Lizzie, and good to be back. Thank you for having me. Well, back in January, almost 1 year ago, when I said on the show that we were underweight equities in the US, well, most people didn't understand why. We simply don't invest into overvalued, very new technologies, and especially with all of the circular investments that are happening within the Tech 7, we weren't comfortable with it. And actually, the year has confirmed we were right. If you look at the S&P 500, if you look at the performance of the S&P 500 over 2025, it has been one of the worst performance globally. If you compare it to emerging markets, you compare it to commodities, you compare it to multiple indices, it hasn't really performed exceptionally well. So unless you were really long this small basket of Tech 7, you wouldn't have done very well. I mean, even against the euro, it has made 7% only in 2016. Our model portfolio has made 31% year to date. So we're quite happy with our model portfolio, to be honest.
But doesn't the fact that some Mag 7 names have actually underperformed the S&P this year show that there is still room to run, that not all of the Mag 7 are trading at runaway valuations?
Absolutely. In the US, there are many companies that are really worthwhile to invest in. I mean, look at the small and mid caps. If you compare them to the valuations of the rest of the market, or the Tech 7, or even defensives, their values are really very, very low at the moment. Some of them are dividend paying, cash flow generating, so they are worth investing in. But it was a conscious decision really to stay away because there are alternatives. When we had TINA, there is no alternative. Remember a few years back, yes, we had to. But today there are many, many alternatives that can provide us with very good value at very low risk. And while currency is not really a big concern, where currency can be hedged. However, we're starting to look back at defensive, small caps and mid caps, because I think with some stock picking, there's some value there.
Okay, so where are the juicy returns if not in big tech, and what tweaks are you making to your portfolio construction from this year into 2026?
So our model portfolio will remain relatively the same. The 60-40 obviously is dying or is dead already. So the baseline for our portfolio today is gold. More than roughly 25% of our portfolio is gold. We've started adding silver recently. We've added copper a few months ago. So this is really the baseline of our portfolio. So this is the 40, if you will. And then from the stock perspective, we're looking more at emerging markets, Asia, so China, India. We're looking at Switzerland, European, in a very selective way. So this is basically where we are. On the fixed income side, we're more on the shorter term than the longer term, because we do believe that the longer term will be quite volatile until there's more clarity in the US. Let's not forget, in 2025, the US debt has grown by 6%, while GDP growth has been around 2%. So this makes it a bit volatile, I think, from a longer term fixed income perspective.
Okay, interesting. And I know that you like gold, but you're underweight US equities, and that will continue into 2026. What if the Fed doesn't cut as much as markets are expecting? What if Jay Powell tries to hold back the FOMC from cuts in the first half of next year in the expectation that there'll be a dovish Fed chair in the second half of the year? What does that do to US equities? What does it do to gold?
So we do think that the Fed will halt in the next meeting. This is clear, especially in light of the latest GDP numbers. There's another factor that we have to bring in, which is Japan, because Japan, as we know, the carry trade has been one of the biggest drivers of financing margin trading in the US. So as Japan increases rates and the Fed holds rates, I think this will not be very positive for US equities in the first half of 2026. We do expect quite a bit of volatility, and we wouldn't exclude another April 2025 event in the first half of 2026.
Wow, okay. Well, I shall brace myself, Ryan. You mentioned Japan there, and of course we had our interview with the finance minister yesterday talking about how they have a free hand for currency intervention, but it's still just a verbal intervention at this stage. How far off do you expect that intervention to be to support the yen?
Well, I think the statement is very, very clear. There's no doubt about it. They will intervene. The yen has gone a bit too far for their comfort, I think, while they are increasing rates. I mean, Japan today, we haven't seen anything move on rates for the past 30 years. So that move is quite substantial from a capital movement across the world. So we do think that they will, as we said a few months back, we do expect the Bank of Japan to increase rates, and they have. We do expect them to intervene on the yen, and we do expect some big moves on the yen. So we are buyers of Japanese equities as we speak, and obviously we stay away from Japanese fixed income.
And just finally, focusing on the Middle East region, Ryan, and of course with the oil price in mind, what's your view on Saudi equities for the next year?
We've been buyers of UE equities. Saudi, obviously, we stayed away because the performance wasn't there. Saudi Arabia is going what the UE has gone through 15 or 20 years ago. So it's reflective in the Saudi equities. We are very cautiously looking at Saudi equities, and we do think there are starting to be some very good pockets to invest in. Saudi Arabia is going through some massive reforms, and this is what's happening on the Saudi equities is just a reflection of these reforms. But we do think there will be a bounce back eventually, and some very nice buying opportunities.
Okay, Ryan, always a pleasure. Ryan Lamond there, CEO and co-founder of Neovision Wealth Management. Thank you so much and happy holidays. Well, now for a look at some other stories we're following.